Welcome to Alternative Investments Chat,
where we demystify the world of alternative investments and financing for entrepreneurs and investors alike.
With these discussions, we hope you're more empowered to unlock opportunities in your business or portfolio. I'm Erin.
And I'm Erica. Let's get started. Hello, and welcome back to another episode of Alternative Investments Chat. I'm your host, Erica, with my co-host, Erin. So today's topic, we are going to talk about investing in transportation assets. So it's a sector that is often overlooked, but offering significant investment opportunities for those investors. Transportation assets like aircrafts, rail cars, and shipping containers, they typically generate cash flow and serve as a valuable collateral for investors.
So why does transportation matter for investors? The global supply chain relies on transportation in order to get their things from point A to point B. Anything that you need has to come from one place to another. That's going to happen via transportation. And this can make these assets essential and recession-resistant. The global freight transport market size was valued at $28.66 billion with a B.
Dang, okay.
In 2021. And expanding at a compound annual growth rate of 11.3% starting from 2022 and predicted to 2030. Institutional investors and family offices, which we'll get into a little bit more about family offices in the next episode, they are increasing their allocations to transportation assets due to their tangible value and income generating potential.
That makes sense.
Companies such as Boeing, which Boeing's having a hard time right now, but it is a transportation company. Airbus and Maersk highlight how transportation assets hold long-term value.
It's interesting. So transportation assets can be broadly categorized into several major asset classes based on their function and their infrastructure type. So this is a key investment sector due to its essential role, like you said, in economic growth, trade, and mobility. These things have to get from point A to point B. We don't have that awesome technology where beam me up, Scotty. You can just
transport.
Auto, what is it called? When they do that? I don't know. Anyway.
I actually don't know.
We're not Star Trek.
Teleporting?
There. Yes. See, I knew one of us would think of it. So let's break down some of these asset classes. So first we have road infrastructure. Roads, obviously, highways, local roads, streets, bridges, tunnels, and traffic control systems. That's all in that guy. Rail infrastructure, freight and passenger rail systems, light rail, metro, anything that's on a track. I think that's rail. Air transportation assets. So these are airports and runways, air traffic control systems, and hangar maintenance and facility. We have to put these, airplanes somewhere. They don't just chill out on the side of the road, right?
They have to go to sleep.
Yeah.
Where do they sleep?
Where do they sleep?
In the hangar.
If they're like me, they don't sleep, but that's a whole nother. And we also have maritime infrastructure. So these are ports and harbors, terminals and docks, and navigational aids. Never even thought about that when I was doing the research. I was like, oh yeah, I guess you do have to, a lot of these boats are equipped with really cool technology.
That's true.
And then we have pipeline infrastructure. So this is for transportation of liquid and as gases. So there are oil and gas pipelines and water and sewage pipelines.
Right.
Those are also something that can be invested in.
Very important.
Yeah.
I don't want my sewage in the street.
Like the old days?
Like the old days. Throw a bucket into the over your window.
That's so gross.
Yeah, it is pretty gross.
That's really gross.
Luckily, we don't have to worry about that anymore.
No, thankfully.
Those are definitely some interesting asset classes. Sewage pipelines being my favorite.
Yeah, obviously.
But there are some lesser known asset classes in the transportation sector as well. Most investors tend to focus on the traditional asset classes as per usual, right? But there are a few others that are starting to gain more traction due to technological advancements, sustainability trends, and also niche market demand.
Just like every other one.
Just like every other one.
Class, right?
Exactly. There are several on the horizon, but there are a few that I really wanted to mention here. Ferry and waterway transportation, which includes passenger and ferry systems in coastal cities, lakes, and rivers.
Oh, yeah. I mean, think about the little islands off, like Massachusetts. There's a lot of times you take a ferry over.
Yeah, absolutely. Ferries are really fun. Urban congestion is increasing the demand for this because sometimes it might be easier to travel by water than travel by road.
Over a bridge, wait, get stuck.
Exactly. Yeah. So that is one way. Also, bike and micro mobility infrastructure. You might be thinking, what is that? But these are your docked and dockless bike sharing systems that are also related to like e-scooters like Birds or Lime or Spin, whatever the heck else it is. I feel like every time I want to take a scooter, I got to download a different app, but what are you going to do?
Well, they're really popular here in Phoenix,
Very
especially
popular.
downtown. I love when I'm driving and I'm like, someone left their scooter. I'm like, no, that's part of a,
Yeah.
like,
Yeah.
you just leave your scooter on the side of the road?
Yeah, exactly. With cities who are trying to prioritize or give advantage to car-free zones and sustainable urban mobility, these have become more popular.
Think about New York. They have you have to like pay extra fees now during rush hour
Yes,
in
that's
certain
true.
areas because they're trying to reduce the amount of cars on the roads.
Yeah, because that's a big problem.
Yeah.
We actually have a carless neighborhood here in Tempe, which is worth mentioning. It's called Cul-de-sac, and it's pretty popular. A lot of people are really interested in living in that sort of environment. A lot of people get around by walking, by taking a bike, by scootering, whatever, and also the light rail's right there. So
That's awesome.
yeah, it's pretty cool. Also, another thing that's rising in popularity, drone delivery networks and cargo drones. I think that we had some of the first test runs of the Amazon drone here in Arizona, and people were really freaked out when that happened.
If you've ever heard a drone, it sounds very, very, very strange.
It does sound strange if you're not used to it, if you haven't heard it before, and you also just see this thing flying through the air. It's easy to think that maybe the aliens are coming, but it's just Amazon.
Just Amazon.
It's just Amazon. But yeah, those are becoming more and more popular, and this can actually help save on cost because obviously they're not paying human beings to do it, and also can help accelerate delivery times. Not that I think Amazon needs to be any faster, but whatever.
Speak for yourself.
I know you like things to come fast, but sometimes I'm like, I ordered this morning and it's already here.
Yep. That's what I like about it.
out.
I love it.
Anyways, also there's automated and connected vehicle infrastructure. We've mentioned Waymo on the pod before. There are still some people who haven't heard of it because they don't have Waymo in their cities.
Yeah. It's not everywhere yet.
It's not everywhere, but here, very popular, and they started to roll it out in LA as well, I know, but they have a wait list, I'm pretty sure, in LA. But they are an autonomous vehicle, so you can call it up, it comes and picks you up, there's no driver. We don't have all the kinks worked out, clearly, but potentially, as we start to work those things out, this could help reduce congestion and accidents because we know humans are faulty drivers. Surely not any of our listeners,
None.
but
Or us.
or us. But we know that accidents happen every day, and if we have a car that can connect and talk with other cars about what it's doing, that could potentially help reduce the accidents on the road, which is pretty cool.
That is really cool. So basically, what I'm gathering here is that there are lots of options for investors to choose from when it comes to this transportation asset.
Totally.
So let's discuss some of the key benefits of this unique asset class. We kind of said a few of them earlier, but there is a stable and predictable cash flows. Many transportation assets generally are reliable, long-term revenue streams, like through toll collections. I never thought about this. Ticket sales, freight fees, or long-term leases. Because again, these are things you don't just put up and take down. Like highway's got to be there for a while.
Right.
There is another great benefit is inflation protection. So these assets have inflation-linked pricing mechanisms, such as automatic toll hikes or long-term lease agreements tied to inflation. While sometimes this sucks for the consumer, think about like airports when they increase their passenger fees or retail rental rates, like, they bump up their rate. It's to just hedge against that inflation, but it's there to protect the investor.
Right.
Another one is there's a again, a higher barrier to entry and monopoly-like characteristics, meaning that this asset class requires large upfront capital investments, making it difficult for those new guys to come on in and take over.
Sure.
It's like good and bad. So for this asset class is a great benefit because no one can come in and just be like, never mind, you
Swipe it
had
out
this
from under
airport,
you.
I'm going to take it now too.
Right.
And then of course, the best benefit is that diversification of your portfolio. Transportation assets provide low correlation with traditional equities and bonds, making them, again, very valuable for your portfolio diversification. Also, many of the institutional investors allocate 5 to 15% of their portfolio to infrastructure for stability and risk reduction. So we're really seeing, again, these people who are helping investors with their portfolio, they're starting to really look at these other asset classes and divvy up some more space for them on there.
Yeah. So those sound like some pretty good benefits to me, but who's actually investing in this asset class?
Yeah.
One being institutional investors. These large, long-term investors manage capital for retirement funds, national wealth, and insurance reserves. An example would be the Canada Pension Plan Investment Board. That's a lot of work.
Yeah, I know. I'm like, that's the what board?
The
Just
Canada Pension Plan Investment Board.
Don't you know them?
Don't you know? Invested in toll roads, airports, and ports globally.
Wow.
Also, private equity and family offices. Family offices with high capital reserves may acquire entire assets like toll roads, ports, and airports. They often co-invest with private equity and sovereign wealth funds. And we'll actually talk a little bit more in the next episode about how private equity and family offices go together.
Yeah.
So stay tuned for that. Sovereign wealth funds, as we just mentioned.
Yep.
These are government-owned investment funds that manage national reserves. And many invest in domestic projects to boost economic growth.
That makes sense to me. Gotta, if you want you want an area to grow, you're gonna have to probably build some infrastructure.
Right.
Someone's gotta front the money.
Yeah, exactly. And also retail investors. Now, this might be something that you haven't really thought about before. This asset class has been typically out of reach for the reasons that you mentioned earlier, that there tends to be a high barrier to entry.
Right.
Most retail investors don't have a ton of money to build an entire airport, right? And you can't really build.
What are you talking about?
You can't also really build just the runway. You know what I mean? You need to build the whole thing.
Yep.
So that has often kept people away from this asset class. However, there are more of these fractional ownership platforms and programs that are allowing people to invest. One of them being NetJets, which is pretty well known. This is fractional ownership of a private jet. So you don't actually own the plane, but you can reserve time and utilize that time to get to where you need to go.
Yeah, you get all the benefits of owning a private plane without having to pay for all the other stuff.
Exactly. There's also rail yield. This has to do with freight cars and locomotives, choo-choo.
Choo-choo.
And XYT Mobility, they have shares of electric taxi fleets, very interesting, rideshare vehicles, and smart urban transport.
Man, I'm gonna have to check out some of these. I already know NetJets, but the other two I might have to check into. Can always diversify a little bit more.
Yes.
So now we've discussed who can invest and why they invest. But again, like we always do, we need to touch on those risks involved with the asset classes. Let's dive into a few of those guys. So there's economic and market risks. Always. Transportation asset depends on economic activities, trade volume, and passenger demand. Think about what happened during COVID-19.
I don't want to.
I know, right? PTSD, I've blocked it out.
I don't want to think about it.
It's not anything I ever want to discuss. No, but think about that. Airlines revenues collapsed during that time because the world just wasn't traveling. There was no demand for it.
Right.
So that definitely is a risk. There's also regulatory and political risks. So there's political shifts, new environmental regulations, and just like anything that can disrupt trade, such as tariffs or border restrictions affecting the transportation demand.
Yeah.
So those ones kind of stink, but they are definitely there.
There are two other risks that I want to mention, not to be forgotten. Operational and infrastructure risk. Maintenance, Technology disruptions and supply chain bottlenecks can all take their toll on this asset class. Honestly, a lot of these risks are really reminding me of when we talked about solar energy. It's kind of very similar sort of risks here, right?
Yeah, you can't have a pothole in the middle of the runway. Or
you can. Maybe your plan lane's upside down. That just happened.
Oh gosh, we're Boeing. Or think about when we were traveling to Boston, we were unsure if we were going to make it because there was a technology issue that shut down almost all the airlines. So again, these can really mess up some of this asset class.
Yes, they absolutely can. Also, there's liquidity and exit risks. Many of these investments have a long-term investment horizon, sometimes between 10 and 30 years, right?
Yeah.
So that can sometimes be a positive or a negative, depending. And if your money's tied up for that long, sometimes people aren't so comfortable with that.
Yeah.
Not to mention that there's also some infrastructure investments that require government approval for sale.
Yeah, you can't just be like, I'm done with this airport. I'm going to just go ahead and chuck it off to the next investor.
Yeah, there's some red tape there for sure. Investors can always mitigate these risks by doing the same thing that, we always suggest people to do, which is diversify your portfolio.
Put all them eggs in one basket over here.
Exactly. Invest in different sectors of the transportation class. Invest in different assets, period.
Right.
But specifically there, if you spread your eggs, you'll have a better chance of staying afloat. That's the idea. Also, prioritize inflation-protected assets. Assets with adjustable pricing models like automatic toll raises,
that we talked about,
which we talked about, can help hedge against inflation and protect you.
Sometimes it's not good for the consumer, but great for the investors. So investors can also invest in transport solutions to future-proof assets against regulations. Again, we're seeing a lot of these companies go green.
Right.
And so if you just start off that way and invest that way, you're not going to run into any of that tape.
Right.
And then also leveraging partnerships with the governments, private equity firms, and sovereign funds for risk sharing. So again, spread it out a little bit. You don't have to take it all on yourself. Buddy up with that other entity and have them take a little bit of the hedge off there. Just so that you're not, again, on the hook for it all.
Right.
Well, that pretty much wraps up this episode on the transportation asset class. So let's go ahead and break down those key takeaways.
Yeah. So transportation assets offer a stable and asset-backed alternative investment. So that can be a good option for some investors. And investors can benefit from the consistent cash flow and inflation resistance, which can make this very attractive. And also, growing demand for global trade and logistics presents long-term investment opportunities. People need their things to get to where they need to go.
Yeah.
We trade with many different countries, and we need to get those things here in order to have the things. So transportation is very important.
It is definitely not going away at any moment. So thanks again for listening to today's episode, whether it's by plane, train, or automobile. We hope that you provided some information on this amazing asset class of transportation. Don't forget to like and subscribe. We'll see you next time.
Thanks for joining us. Stay tuned for more insight on our next episode.
And don't forget to subscribe to continue the Alternative Investments chat.
See you next time.
Content provided in this podcast is for informational purposes only and should not be construed as professional, financial, or investment advice. This podcast should not be construed as an offer to sell or a solicitation of any offer to buy any securities. We strongly recommend that you seek advice from a qualified professional before making any financial decisions.